Well, hey, I'll take it. Give me 142K all day for Bitcoin. I love it. And importantly, if Bitcoin is able to complete this bull flag pattern and push up to 142K, it would also break out from this parallel channel to the upside. A couple of important levels of resistance up there would get broken to the upside if Bitcoin's able to rally not just above 125, 126K, but all the way up to 142. Wouldn't surprise me if Bitcoin does that over the next couple of weeks. It looks like it's just consolidating before moving sharply higher. So this is Bitcoin in gold terms. I'm going to go ahead and remove my chicken scratch off of here. And this level of support, this is important right here. The 30, 29 and a half, 30 level really want to see this hold. And, I do see an interesting pattern being put in here. Right here, this looks to me like an inverse head and shoulders pattern. And pattern completion there would be somewhere up here, maybe 35, which is very, very close to this level of, I think, would be resistance. So let's see if, Bitcoin's able to hold support in gold terms. Now, speaking of gold, gold itself
I guess the satellite move.
Something changed.
closed above 4,000 the other day, but I mean, hey, we're back above $4,000 on the. So is my internet breaking up here for a second? Just want
Yeah,
Yes.
you
to.
have.
Yeah, it is.
Yeah,
Okay.
but it was briefly.
Yeah, just briefly. Yeah, it's funny because the cloud cover just got a little bit thicker, and then the internet cut out for a second. So, speaking of gold, gold has been ripping higher. But as I was sharing with you guys just the other day, if you price gold in USM2 like this and then zoom out to a monthly, what you'll see is gold in real terms. And yes, gold has run higher, really ripping higher in real terms, adjusted for inflation. Gold has not even broken above the highs that it put in back in 2011, when it was trading for, I think, $1,950 an ounce at its peak. I think it just barely missed 2000 or just very, very close in 2011. But
Did you? Yeah. Did you hear the pricing gold, like gold SPX and Standard Poor ratio, like has always been like historically 1 to 1. And if you do that now, it comes to 1.6. We're saying that the market is way too expensive. Like it's always referred to reverse to the mean of like 1 to 1 ratio between the SPX and gold. Have you ever heard that before? Or
No, I haven't heard that. And just taking a look at this pattern, it doesn't look like there's a whole lot of signal here. I may be missing something, but you know, there's definitely signal here. This was the dot-com bubble where, tech stocks just outperformed everything. But what I noticed though is the 200-month moving average. And I also see that this has been support over the last couple of years. So
yeah,
maybe the market, speaking of the S&P, maybe the S&P could actually bounce from here. So
or gold drop, right?
or gold drop. I think it's probably likely that uh, the S&P continues to run higher. So
Yeah.
if we take a look at the S&P, I mean, this is a monthly chart, and if I zoom out a little bit further, so this is the S&P cash index. Let me just remove the 200-month moving average from this, and look at that parabola. Just amazing. So let's go ahead and zoom into a daily. And on the daily, this pattern, that's exactly what we saw after the COVID crash, this V-shaped recovery. And I think really the next level to be looking for is 7,000 on the S&P. And so what I've done here is I marked the end of this year and the 7,000 level. And we'll see. We'll see if it just melts up to 7,000 throughout
It's
the rest of the
better
year.
better to 6,900, SPX 69.
Yeah, that's right. 6,900. Just missed 7,000. And then maybe get there, in the beginning or middle of January or something like that. But volatility continues to just get smashed at every chance. So, there is really no vol to speak of. And markets continue to melt higher. Now, one thing that was a little bit concerning to me today about NVIDIA is this candle. So this is, I think it's referred to as a hanging man. You could call it, some type of a shooting star, but there's a gap between yesterday's close and today's open, and then this big wick up there. This looks like a bit of a topping tail. Would not surprise me if all we see is this gap fill and then push higher for NVIDIA. So I think there's no stopping this buying pressure, and it looks as though markets continue to push higher. So this little pullback out of Bitcoin here, uh, this is most likely going to become just another great buying opportunity before Bitcoin continues its run and puts in fresh all-time high after fresh all-time high. I think that it continues to rip. There's nothing bearish about this pattern that I see.